let's also bring on board Anshul Saigal, founder of Saigal Capital. And Anshul, hi, good afternoon, and thanks so much for your time and thanks for joining us on the show today. Help us understand a little bit about some of these tire stocks that we've seen. JK Tyre, for example, in focus today, a 12.5% uptick coming in, very sharp uptick coming in on this stock. What are you making of this tire space, the rubber space right now, since commodities are slightly pressured? Give us a sense on what you're making on these rubber beneficiaries as well as some of the crude beneficiaries, given that crude is once again trying to find its footing.
Afternoon. Thanks for having me. So generally, it is a statement within the investment management community that if you're positive on autos, buy tires. What that means is that you don't know whether EVs will do well or the erstwhile engine companies will do well. But if either of those do well, tires as a result will be beneficiaries. And to top it all, here you have the play on commodity because rubber prices decide whether tire companies make healthy margins or no. And if rubber prices ease off, then clearly that impacts margins positively. As you rightly mentioned, rubber prices have been kind of easing off in recent times. And as a result, we are seeing what we have noticed in recent times in stock price performance as also margin performance. And time will tell whether this continues or not. But by and large, if you're positive on the auto sector, then this is the space to be in.
So that's the outlook on the tires. But well, of course, very select companies are talking about a positive demand. But the biggest key trigger could be the cool off in the raw material prices and definitely the crude derivatives. But since we were just talking about the pharma space, so pharma major Sun Pharma is slated to report its numbers tomorrow. But what is the street penciling in? Let's get in all those details. And for that, let's go across to Varun, who's standing by with all the number crunching. Varun.
Well, we are expecting good set of results from Sun Pharma, wherein the revenues are expected to grow by around 9.3%. They are expected to come at around 13,100 crores, and the EBITDA is expected to grow by around 19.6%, and that would result into the margins going up from 25.3% to 27.7%. Now that's an increase of around 240 basis points. The profit is expected to grow by around 6.6% and come at around 2,830 crores. Now, if you look at the geographical mix, the India and emerging market, they are expected to grow by around 10 to 13%, and the US markets, if you look at that, the overall sales are expected to come by around 485 to 500 million dollars. Now, the US sales will actually be aided by the overall Revlimid sales, which are going to be better in this quarter. Also, if you look at the rest of the world, on a sequential basis, the rest of the world sales will actually decline by around 15 to 17%. Now, this is because of a milestone income that was there in the base quarter of around $45 million. This time it would not be there. So, that's the reason the rest of the world sequentially it would show a decline, and that would actually lead to an overall decline in the global specialty business on a quarter-on-quarter basis. But yes, on a YOY basis, there would be some growth. The R&D spends, they are expected to go up by around 80 to 100 basis points on a quarter-on-quarter basis. So let's see how much the impact is there on the overall margins. Keep an eye on the new product launches that the company is doing. But if you look at the overall results, we are expecting a good set of numbers from the company, especially on the margin front. Although in the last 3 quarters, the company has maintained a margin of around 28%. This time we are expecting 27.7% on a year-on-year basis. It's a rise of around 240 basis points.
Okay, Varun, thanks for taking us through that. So, good set of numbers expected from Sun Pharma tomorrow. But Varun, while you're with us, also talk to us about another nifty company that's expected to come out with its earnings later today, and that's ONGC. Now, revenue is expected to be flat on a sequential basis, but we do understand that the street is penciling in the profit to increase. Tell us what the overall consensus is and what are going to be some factors to watch out for when the numbers do come out.
Well, so you rightly said that operationally, if you look, the numbers are going to be weak. But yes, because of other income, because of taxes, you can see the overall profitability that is going to increase by around 7%. And we are expecting 8,810 crores. That is a profit number that we are expecting. Now, the revenues are going to be flat. Now, the basic reason because of which the revenues we are expecting a flat revenue is the sales for this quarter, they expected to be flat. If you look at the production numbers, the crude production and the gas production, they are going to be down by around 2 to 5% on a quarter-on-quarter basis this quarter. And because of this, if you look, overall revenues are going to be flat. Now, if you look at the EBITDA, we are expecting the EBITDA to decline by around 4.25%, and because of this, the overall margins, they would decline by around 2.5 to 3%, and we are expecting a margin of around 53.9%. Now, if you look at the crude oil prices, they are down by around 8% on a quarter-on-quarter basis, and also the benchmark Singapore GRMs, they are down by around 58% on a YOY basis, and this will actually impact the overall realizations for ONGC and hence impacting the overall margins. For the APM gases, the prices have increased, but they have been increased in the month of April. So that impact will come in the Q1 quarter and not in the Q4 quarter, and hence you may not see the benefits of the APM gas in this quarter, and that's the reason the overall margins are going to be subdued. Keep an eye on the upgradation of the ramp up of the gas production facility that the company is doing. But if you look at the overall results, we are expecting subdued quarter from ONGC.
Subdued quarter is expected from ONGC, and the stock of late has been hammered as well. But Rudra, give us your take on ONGC, because I think that the stock is trying to flirt with the levels of 250. Do you believe that it could be one of those breakout candidates, or do you believe that it could actually act as a resistance? Because the numbers are definitely awaited, but what are the charts telling you?
See, based on price action for very short term, if you see the last 1 week price action, definitely it is very positive. And even when markets were down, this stock is definitely outperforming. So for me, the likelihood of this breaking that resistance of around 250, 255 zone is very, very high. And definitely I feel keeping a tight stop loss now at around 243, I will be looking at buying ONGC right now. And once it breaks the 250, 255 kind of a range, yes, a move towards the 270, 75 zone is definitely open. So I will be pretty bullish on ONGC based on the last 1 week price action.
Call on ONGC coming from Rudra. Nagraj, coming to you, what are some of your stock recommendations? What's looking good on the charts at the moment?
I have two stock picks. One is from realty front, Oberoi Realty. If you look at the chartically, it was moving in a larger consolidation pattern over the last couple of months, and currently placed at the hurdle of around 200-day EMA, making an attempt of upside breakout. The overall chart pattern of even real estate stocks, majorly Oberoi Realty, is looking very positive. I'm expecting a decisive upside breakout from here onwards. Currently trading around 173031 levels. One can look to buy at this point of time. The upside target would be around 1840, and one can place a stop loss at 1680 levels. Second one is Amber Limited. Amber Enterprises has been in a larger consolidation pattern, recently placed at the edge of upside breakout of the downsloping trend line, which is a strong technical resistance so far now around 6650 level. I'm expecting a upside breakout in the of the hurdle a very short period of time. One can look to buy at this current market price around 6625. The 7000 is going to be the next upside target in the near term, and 6450 is going to be the stop loss.
Right, so those are two of the calls coming in from Nagraj. But Rudra, what about you? What are your stock bets?
Of that consolidation and having made a strong move now from levels closer to those strong support areas of around 620, 630. Now it is breaking that 720 to 725 recent resistance. And if you see the volume action, it has been very positive. So I feel Tata Motor is headed towards that levels of around 800, 820. But for very short term, yes, a target of 755 is possible on Tata Motor. Keep a tight stop loss of 715 for this long call. Another stock which has been very positive for me, and even on bad markets, it is holding to its level, that is Pyramil Enterprise. So Pyramil Enterprises for me has again given a clear breakout above levels of 1080, and there has been a strong support in delivery volumes also in this counter. So for me, PEL is a stock to go long at current market price, looking at initial targets of 1200, and eventually yes, 1280, 1300 is possible on PEL. Have a stop loss of 1120 for this long call. So a buy on Tata Motor and a buy on Pyramil Enterprise.
So buy on both of these counters is what Rudra is recommending. Let's watch out for that. But Anshul, just wanted to have your take on these cap good companies, because for today what we are seeing is that for a stock like Siemens, there's been no stopping after that analyst meet, and the company is quite positive across the board. They're expecting a margin recovery as well. The stock is shot up around 5%. And Anshul, in the earnings, we have seen, and specifically I remember it for Siemens, that though the net profit was below the street estimates, there was a dip of close to 40%, but the management commentary is really giving confidence to the investors, not just Siemens. Other than that, if we look at ABB India, all these counters have been holding up quite well. Do you believe it's once again time to look out for these names, or the valuations is not giving that much of a comfort here?
Hi, Srishti.
Hi.
Good to be speaking with you.
Yeah.
If you look at these companies, you're right. The results were slightly weak for the quarter. But then, if you look at both the commentary and the order book release of many of these companies, you will notice that the tailwinds are just not stopping on order inflows in these companies. That is giving you a signal that this is not a flash in the pan, that these companies are seeing so much growth, or they have seen so much growth over the last 3-4 years. What our assessment is that the sort of speed bump that we saw in capacity addition in the period, say 2012 to 2021, that speed bump will need a lot of catching up going forward. And with themes like Make in India, Atmanirbhar Bharat, as also attracting manufacturing into the country, which is a policy of this government now, the next 5-7 years are going to be tremendous for capacity addition in the country. Now, as a result, companies like the ones that you mentioned, they're going to see significant tailwinds in demand. A quarter here, a quarter there, they may see earnings slowdown, revenue degrowth, or whatever. But over a longish period, these companies will see significant tailwind. And clearly, the commentary of management of this one company is indicating that. We tend to concur that this is a sector which will have a long runway for growth, and where investor interest will also remain quite strong going forward.
Outlook coming in from Anshul on the entire cap goods space as well. But viewers, on that note, we'll slip into a very short break. Last 15 or so minutes left of trade, and we'll be right back to start winding down for the day. Hi there, welcome back to Your Trades. Pardon me, you're watching Closing Trades on ET now. Let's start talking about some stocks that are going to be in focus on the back of their Q4 earnings. IndusInd Bank, a stock that has been down and out in today's trade and has been the biggest nifty loser today ever since the opening bank. So IndusInd Bank is going to be in focus on the back of its Q4 numbers, and this is also going to be in focus on the back of the discrepancy that we've seen coming in their accounts. It's going to be key to watch out for the kind of numbers the company comes out with this time. Gaurav is waiting by with more details on what we can expect when the numbers do come out.
IndusInd Bank is set to report one of the weakest quarter that we have seen so far, and there is some reason behind it. First, when we talk about the operational updates for Q4, we have already seen the bank has been suffering because of the higher MFI exposure, and as a result, when we talk about net interest margins for the last 4 quarters, we have seen net interest margins has fallen significantly. Other than that, when we talk about the MFI, the stress is not likely to go in near future, and that is the reason why that is one of the concerns. But apart from that, there is another concern which comes as discrepancies. When we talk about discrepancies, we already know that in this quarter, bank is set to report a discrepancy worth 1900 crore rupees because of the currency, and second discrepancy in net interest income in terms of 600 crore rupees. So definitely these numbers are going to impact adversely in terms of profitability, and if we consider these, the net interest income is likely to go down almost by 23%, and the PPOP, which is pre-provisional operating profit, is likely to go down more than 50% on a year-on-year basis. In fact, when we talk about asset quality, some concerns may still remain, and that is the reason why now brokerages are expecting slippages to remain elevated, and credit cost also to remain elevated. Other than that, when we talk about profitability, bank can actually report losses in this quarter, but let's also not forget that bank has contingency buffers, and now brokerages are also believing that bank may use these contingency buffer to report profits and take some of the hit on the contingency buffer in terms of whatever discrepancies the bank is likely to report. Other than that, when we talk about advances and deposit, there also we may see a slowdown. They are expecting 6% growth on a year-on-year basis in both advances and deposits, and these may remain flat on a sequential basis. Other than that, when we talk about the commentary, we are expecting some kind of commentary in terms of how the management trend is going to be, because let's not forget that because of these discrepancies, CEO has also recently resigned. So definitely any kind of commentary on that front, how the growth is going to be, is a key thing to watch out for. How bank is set in terms of their asset quality is also something to be watch out for. And let's also not forget that now street is expecting net interest margins to contract more than 20 basis points sequentially. So definitely any kind of commentary on how the NIMS trajectory is going to be is a key thing to watch out for. But definitely a weak set of number is what street is expecting from IndusInd Bank in this quarter.
Well, thank you so much, Gaurav, for giving us those details. But Anshul, what do you make out of IndusInd Bank? Because we all are aware about the troubles with this particular banking major. But what, as per you, will be the key turning point for the investors that they should be watching out for? Is it the clarity for the with respect to the management? Any particular number that you will be looking forward to?
Krishti, I'll take you back to the days when there were troubles in another large private sector bank. Sometime around 2016-17, there were issues with ICICI Bank on credibility of management, as also on asset quality of that bank. Now, you will recall that for nearly a 3 to 4 year period, that bank had consolidated. It had really underperformed the private sector banking space, and the market was really struggling to understand how this will play out. What one needed to focus on at that time, in our judgment, was that are these issues of that bank then, are those issues permanent or temporary? Can management credibility be, it can come back, or will it remain weak going forward? Can asset quality also improve, or will it remain weak? Now, fast forward to today's times, and we see one bank going through its troubles. The question again rises whether this is a permanent situation or a temporary situation. If in the case of ICICI, it turned out to be a temporary situation and the stock is up nearly 10 times since that weak situation at that time, and something similar plays out here, and your time horizon is not the next 2-3 months, then you know the answer. But if your time horizon is in the short term, clearly I will be, or anybody will have a hard time giving an answer as to what you should do in this bank, because in this small time frame, the volatility will remain. There will be issues and news items which will come out, which will be adverse to the bank. But if your time horizon is in the long term, say 3-5 years, then clearly situations like this, if they are temporary, there are opportunities to accumulate stocks in general, my guess is that it will be something similar here.
Thanks so much for joining us, and I appreciate your time and for your views as well. While we are talking about some earning candidates, ITC is going to be in focus, Nifty 50 major, and stock going to be releasing its earnings tomorrow, so the stock will be in focus. Let's take a look at what the street is penciling in largely when it comes to ITC's numbers, and the muted set is what we're expecting this time for ITC on a number of factors. But first, let's understand what the fine print could look like. Revenue is estimated at 16,980 crores compared to 16,579, an uptick of just 2.4%, but other than this, all other metrics could continue to be in pressure because EBITDA is seen down 2.3% year on year at 6,018 crore. You have net profit also expected to fall by 1.5%. 4,934 crores is where we are seeing this number, and margins are also expected to contract at 35.4% compared to 37.1% year on year. Important factors to watch out for and important expectations. First of all, let's talk about the cigarette business. Cigarette volume growth is expected at 4.5%, so this continues to look healthy, and 6% sales growth is what you're expecting for the cigarette business. Paper, however, paper segment is expected to be weak and sales growth estimated at 4.5%, and paper business net profit could dip due to competition from imports. Also on the back of the paper business acquisition that the company has done recently, any commentary on that note also is going to be important to watch out for. For their FMCG biz, the sales are expected to grow 4%, and net profit and margins are expected to be under pressure overall due to the raw material inflation that we've seen in palm oil, maida, and negative pricing in notebooks that the company has undertaken. Agri sales are likely to surge 20% year on year on the back of a soft base. So when it comes to key monitorables, demand outlook on urban and rural sentiment is going to be important to watch out for. Competitive industry, raw material trends, especially the outlook on leaf tobacco prices for their cigarette business, agri business outlook, as well as pricing strategy are going to be in focus when the numbers do come out. But well, yes, muted set is what you're expecting from ITC for Q4.
All right, so a muted set expected from ITC, so all eyes on that. But Rudra, just a few minutes left for the market to close. How are you looking at the closing, and what are the key levels that you should be watching out for? And if already our traders have some of the positions either on the long or the short side, how should they hedge themselves? Give us some sense there.
See, I'm very clear dip has to be used as buying opportunity. In Nifty, 24,500 is a strong support, and on Bank Nifty, the levels are at around 54,000. So every dip to these levels, I'll be a buyer. I'll be very stock specific and sector specific in this market. For me, public sector undertakings look very, very good, especially if you look at themes like whether it is defense, or for that matter, even shipping, railways, they all look very, very comfortable for me, and you should not miss these stocks to buy in this dip. And if I have to name some of them very quickly, look at stock like BEL and HAL when it comes to defense. And again, for that matter, railways, whether it is IRCTC or even Container Corp, looks very, very strong to me. And again, from shipping, you have a lot more names, whether it is JRSC or you want to pick Masgao Dock. So a lot of stocks in PSUs are very, very bullish for me. And I'll be using every dip in market to buy PSUs and PSUs.
That's a very bullish outlook coming in. And Rudra, on that note, we'll let you also go as well. Thanks so much for your time and thanks for joining us.